Welcome to Markets Now. Alan Brugler with Brugler Marketing is joining me. I'm Michelle Rook, and we had a lower day in the grains. Livestock leaning mostly higher except for deferred hogs. And Alan, let's talk about the grain trade. Big sell-off here today. Market kind of ignored these crop ratings, the lowest since 1988. But did the market just kind of look forward at the forecast or what?
I think there was a pretty good focus on that 2 week out weather forecast, the post 4th of July forecast. You can have a lot of traders that after Friday's USDA reports will take an extended weekend. The markets are open on Monday, but they'll just take off Monday and Tuesday. So the focus is on that post July 4th period. The 8 to 14 day forecast showed above normal precip chances for everything east of the Rockies. So that was kind of a warning shot that maybe the conditions are going to get better in July. We've also been watching a model pretty closely that looks at transition years from La Nina to El Nino, where it all happened in the same year. And in those years, you do get a much wetter pattern, particularly for Illinois and Indiana in July and August after a dry start in June. So, this forecast tied to that tendency kind of says, oh yeah, maybe we need to back off a little bit on the amount of risk premium we're putting in here.
Yeah, and we have had a good run here off the lows in both December corn and November beans, especially. But it's end of month and a quarter. You're going into big reports here, right?
Big reports on Friday, and I think that's an important point. USDA could swing the corn production, or at least the corn supply for next year, by 500 million bushels on Friday. Just a little change on the grain stocks for old crop and a little change on acreage for new crop, and you could have a fairly substantial swing in that bottom line. Again, we don't know which direction, and sometimes they're counteracting each other. Stocks are higher, but acreage is lower, that type of thing. But that type of a shift dwarfs some of these week-to-week model changes for yield. So we have to recognize that report's coming up on Friday, and it can be a big market mover.
Yeah, what is your sense about acreage? Average trade guesses don't show much of a change, but obviously there was a little bit of a shift up in the northern areas where they couldn't get planted, and then all of a sudden they planted everything in about a week.
Yeah, our bias is that it probably is a little lower, that we probably got a little more prevent plant out of it than what was being estimated back in March. Typically PP is going to show up in corn, whether it's corn or beans, that actually got shifted just because of the way the program works. But we're looking for a slightly lower corn number. The shocker would be if it goes up from what we saw in March. I think the beans are a little more problematic because with the dry weather, you may not get as many double crop beans as what you would otherwise with these price levels. And double crop does count in the acreage total. So, you could have picked up some late bean planting, but have it offset by not having as much double crop.
Now, we did get a surprise in the last quarterly stocks number as numbers came in below trade estimates. Is that likely to happen here again? A lot of us are watching the tight situation and the basis levels and thinking, man, is this crop smaller than what USDA is printing?
Well, I've given up trying to estimate these grain stocks reports. I shouldn't say that. I do submit to the wire services, but I don't have a high confidence level in what USDA is going to find. The whole reason for doing the grain stocks reports is to pick up that residual use or those miscalculations on the production side. It's really obvious in the September grain stocks reports for corn and beans. It's not quite as obvious in June, because you still have to allow for the fourth quarter disappearance. But we know that the production was light in the Western Corn Belt. We know particularly on corn, we were 500 and some million bushels less supply than we had the previous year. That's still being expressed as we go into these third and fourth quarter grain stocks. So again, I don't have a high level of confidence as to whether they have to re-estimate on the production side yet.
So what's your thoughts about technical action today? November beans back below $13, and we've got the December corn futures still kind of holding 560. What were your lines in the sand?
Well, the key numbers today for the corn, we're holding the 50% retracement, and well, actually that's true in beans too. We went down to the retracements, went down to the 100-day averages, and then we started to find a little buying interest. But from a pure technical standpoint, uh, bullish news failing to make the market go up, i.e., the poor crop ratings, is a very significant thing to me. We do have some of the oscillators, the stochastics and so forth, do have sell signals as of last Friday, even. Some of your trend following stuff like MACD is just now getting to a point where it would turn. But uh, yeah, it would be very easy if we break that 555 to 560 area for December corn to go down another 20 some cents uh, to the next retracement. Soybeans held a little better on their support levels today, but yeah, being below 13 tells you that we're not wanting to build any more risk premium in here at this price level.
What about the wheat market? Did wheat just follow corn and soybeans lower, or were we removing some geopolitical risk premium?
It's a little hard to tell. I mean, wheat is easy to move, I think, is the problem here. That you get somebody that wants to move a couple thousand contracts, and they can move the price pretty quickly. There just isn't enough paper on the other side, so we get these really big extended moves in the wheat. The Russia situation is not very clear at all. Everybody's kind of keeping an eye on it because they are one of the biggest world exporters for wheat. But where the world food situation is such that the UN is still allowing Russian wheat exports, and unless the country's infrastructure just totally breaks down, we expect that that's going to continue, and they're probably going to discount the heck out of it to get it to move and get the cash in their pockets. Ukraine exports are probably going to be shut down in July. The corridor is not likely to be renewed, at least as we see it today. Which means the Ukrainians will be having to push more of their production through Romania or the Danube ports, Poland, those kind of places, and they just can't put as much volume out in that situation.
Yeah, Russia has definitely undercut us. No wonder our demand and our exports are so horrible. What about the cattle market? Have we done our technical correction? Have we cleansed that market? Is it healthy? And will we at some point go back up, do you think, here with these tight supplies?
Well, I think we've taken out some of the week longs. We've blown off the steam a little bit. The market was extremely overbought several weeks ago. The fundamental story, the long-term picture hasn't changed much. We're still in the liquidation phase of the cattle cycle. We're not really getting very many indications of heifers going back to be mama cows, which is what would be needed to turn the cycle. And when that first happens, then feeder supplies get even tighter because right now we're putting those heifers in the feedlots. I think we found some possible support here. The June board has to converge with cash on Friday when June expires. I think that helped prop it up a little bit today. The the thing you have to remember is the seasonal tendency for cash cattle does drop off a little bit in August or September lows most years. There are
True.
exceptions. Beef prices are still quite stout at the retail end of things. Pork has come back up a little bit. Uh, so you do have 4th of July demand coming up here. And in fact, at the retail level, those sales should already be being made. We'll come back after the 4th and ask ourselves how much volume cleared.
Yeah. Aside from fundamentals, though, the other big key here is if the funds continue to defend this big long position they have, right?
They have a huge long position. They may have liquidated a few here and there. We'll see on the commitment traders report whether they actually made any major shifts. Frankly, I don't see any fundamental reason for them to get out of a long position uh, overall, just because of where we are in the cattle cycle.
Yeah. And the hog market, the funds have covered most of that short position that you and I have talked about before. But, after this big rally, is there much more upside, do you think?
Well, hogs are very complicated because of the Prop 12 situation in California, which we were under pressure because that pork wasn't going to be sold and couldn't be
Right.
moved into California. Then they kind of revised the numbers a little bit and said, okay, if it's in California before July 1, it can still be sold even if it's non-complying until year end. So you were forcing a lot of pork that was going to go to California to go other places. Now there's a small window to put it into California. That's helped turn the market back up. We will have the hogs and pigs report on Thursday afternoon. That's likely to show that we're not expanding yet. And in farrowing intentions are probably still in the negatives. Uh, that'll be one of the things we'll be watching closely in the report. So if we are still in cutback mode, then I think that's supportive to the hogs. But we are because we can't change all the facilities to meet the Prop 12 standards. You probably do over time lose a little bit of pork consumption, and that's something the market's got to equalize or level out or find a way into export channels.
Absolutely. Well, thanks for joining us as always, Alan Brugler with Brugler Marketing, and that's Markets Now.